This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade on Thursday, we welcome in our good friend Bryan Doherty with Total Farm Marketing. And Bryan, good afternoon to you, sir. I know I am busy wrapping up the Farm Progress show, and you are busy watching a lot of risk off in these markets today, Bryan.
We are, and what a great time of year, and hopefully it was a great show, and just, maybe in some ways getting back to normal and getting out sort of in sunshine and people. So
Definitely.
And that's
No.
my sort of way to chew up some time and avoid the markets today. So yeah, pretty rough. Down 12 or so in corn, 28, 30 in beans, same thing in wheat, more than 30 in wheat. Just a real risk off. Big story probably this week is just continued strength in the US dollar. Expectations for higher interest rates, that's driving the dollar upward. And it looks like the investment community is quickly taking a defensive tone because of that. Crude oil down kind of big here this week as well. So kind of a pretty rough week. You got harvest coming up. You've got Ukraine corn sort of on fire sale. They're trying to sell corn cheaply. They're trying to generate some money. So you've got all of that, and really you just kind of ran out of bullish news after the Pro Farmer Tour last week. The market kind of bought the rumor, and then it bought the fact, and then it just kind of ran out of gas.
Well, I know as well, Bryan, yesterday was the end of the month, and one had to wonder if maybe we were seeing just some book squaring leading to some of the pressure yesterday, but then the follow through today with a new month. I wonder, heading to a long holiday weekend, what could we maybe see Friday? What is this market picture going to look like as we move into the holiday weekend, we wonder, Bryan?
Yeah, great question. Great observation. We do have the 3-day holiday. So when you kind of look at all of it together, you got a higher dollar, holiday coming up, impending harvest, corn cheaper elsewhere in the world, energy prices on the decline, kind of just go on and on and on. It's kind of easy to see maybe with some hindsight why the markets are down. Technically, no damage to the corn chart whatsoever. Had a good surge higher here, correction back, held the 10-day moving average today. If prices were to break down a little bit further, could push towards 647 on December. That was a low from August 26th. Currently at 658. You just got to think common sense here. We started here in the middle of the month at near $6, went up to a high of I think it was 680, but let's just call it 684. A correction back to 650 makes sense to me. It's not what I want. I kind of want the market to keep going higher for corn producers, but it also gives end users who are kind of reflecting on this Pro Farmer, this digital DTN number, and some private estimates as people walk the fields that, we need to probably step it up a little bit. I'm not trying to be an alarmist here, but if the U.S. comes up with a yield somewhere in that 168 area, if that's the true yield, either demand has to shift a lot, or we're going to have to ration the supply somewhere. That's just not enough corn inventory in the United States. Every bin will be filled full, and farmers will be really stingy, reluctant sellers. So I am a macroeconomic guy, big picture. This is getting precariously tight in the northern hemisphere.
Very true. Soybeans Thursday at the close, November beans especially breaking through that key $14 level. What's that chart looking like to you? Do you think we got a lot more downside pressure there, or is this maybe a spot where we could find some support here after today?
Great question. Let's step back a little bit. If you're a macro guy and you look at the big picture, we're in a big sideways range. We're trading toward the lower end of the range. No real technical damage. We're still holding above the low from a couple of weeks ago, and then the low from a couple of weeks before that. So we still got that intact. But that double top up there here with the high coming last week when we saw that November being 1484, and that goes back to the second hop at the high at 1489 on July 29th. That failure there, a little bit concerning. So I think the the not certain bulls have already moved out of the market, and now they're going to probably, with today's close under the 50-day and 40-day moving average, under the 200-day, we're in jeopardy of really testing the bulls overall. And yet we had good export, again, another export sales announced to unknown destinations. So it seems like we're selling some beans, but we don't know how much because we don't have any weekly export sales data, which is kind of important to have this time of year to kind of know if you're setting the tone. And I don't know, I guess it'll come out or be fixed sometime in the next 2 weeks after the 12th or somewhere. The 12th is the next supply and demand report. But risk off in the beans again. The crop just looks better. If you look at the pro farmer numbers of last week, look at the USDA, both kind of aligned around that 51.5, 52. That's a pretty solid crop right now. Some really important rains here this past weekend, solidifying some yields where it did fall, or at least negating in areas that aren't getting rain. So probably, holding the crop size. Wheat, that is really just a mixed bag, kind of ugly here today. Worldwide, same thing. We continue to look at a market that's chopping a sideways pattern. Had a chance to kind of break out to the top side here 3 or 4 sessions ago, failed. Technically, no damage on the charts despite today's down day. We're still right in the middle of the range.
Yeah, a lot of things to consider there and watch as we move forward. Bryan, during the Farm Progress Show, I heard a lot of conversations from farmers. They are worried about cost of inputs going into 23. They're starting to look at some things. A lot of guys that are being told maybe to lock it in some 23 crop if they can lock in some margins, lock in some fertilizer, etc. And also a lot of guys who haven't really sold a whole lot of this current new crop, this D's 22 corn or beyond that, or November beans for this year. So a lot of conversations out there. One has to wonder, when the market's moving down here heading into the holiday weekend, if that may force some guys to maybe start looking at some of those margins a little bit closer. I know it's a conversation that is really being had, it seems, right now, Bryan.
Yeah, and it's a conversation that I would say, Jess, we need more than 5 minutes. We need an hour and 5 minutes to really kind of look at this whole picture. But in quick summary, you're headed toward a harvest season. You've had a rally in the market. Shouldn't shock anybody that we're setting back. It just shouldn't shock anybody that we're setting back. 19% of the corn crop rate at port are very poor. Farmers got to really look at that and say, with input structures the way they are, am I going to really chase the corn market and plant more corn next year? Do I switch to beans? Because right now, if you read on a daily basis, it's one problem after another with natural gas prices and availability in Europe and what that means for production of fertilizers there and worldwide. So again, going back to kind of the macro picture for next year, you might want to get 10% if you haven't started, or some kind of starting point. Hope it's your worst sale. It's still a high price historically. And historically, the market has said, look, when we have high prices, we figured out ways to cure them. We produce more and use a little less. So if we use a little less in the year ahead and figure out how to produce more, the handwriting's on the wall. On the other hand, you've got a long time to market 2023 crop. And so when we look out a year from now, and then if you grow the stuff, you've really got another 6 months to 9 months, maybe a year after that. So you've kind of got, in some regards, a 2-year window to market that crop. I'd like to say be patient, wait for rallies. I think the fertilizer structure, that's a difficult situation. If you have things locked in, I've talked to some farmers that said, hey, I've locked it in. I can make money on this, or I can make money on soybeans. They want to get started. They want to start forward selling. My bias is to then reinvest some of that in some kind of an option spread where you have a risk that is established. You know what it is. You've got both sides covered, and you go from there. I don't know what else to offer out in such a, what I'm going to say, crazy world environment right now, that it's kind of scary when you look at everything.
Very, very true. But I thought very well summed up. Again, we could probably spend an hour on it, Bryan, but great summary on those thoughts there. Livestock trade Thursday, relatively okay. I would assume, expected, at least with cattle, with corn moving lower. But I know cash trade and cattle's been a little lackluster here this week, Bryan.
Everything's been a little lackluster. My guess is going into the 3-day weekend, you weren't getting any surge on the retail end, the really sharp inventories, which probably tells me that that buying was over a few weeks ago, and they're not, the retailers aren't seeing the store shelves empty. No surprise there with high priced items this year. Look at the cutout values. You've got to step back a little bit. Gosh, you go 257 on choice and 236 on select. Those are still really good prices. The question is that enough to drive the futures market higher right now? We are entering that fall window too, where sometimes prices are in decline. If somebody said to me, Bryan, in fall, am I a buyer or seller cattle? I'm saying you're a buyer, but you wait. You wait until, let's say, mid-September to mid-October and look for that low. The overall trend, no, I think still stays higher on limited supply. I don't think you can get away from that macro picture. And ultimately, both cattle and hogs have plenty of room to recoup and recover and move higher, especially the hog market. I think as we now look out to those deferred months, 95 in May, $100 in June, historically good prices. They've come back off the lows from last week, but those particular contracts, I think you're going to see both well over $1 at some point.
Well, Bryan, fantastic stuff. I know if producers want to have a conversation and talk a little more in depth about their individual operation, you and the team there, Total Farm Marketing, can help them do that. What's going to be the best way to get a hold of you?
It's what we do all day long, and we do a good job of it. 800-334-9779. That's our phone number. Best way to get a hold of us. We're also have a website, totalfarmmarketing.com. Or you can email me if you want to just shoot me an email with a question on it, Bryan@totalfarmmarketing.com, and that's Bryan with a Y, Bryan.
Well, again, totalfarmmarketing.com. And Bryan, always appreciate some time and insight. And I know I am on the go for Farm Progress Show, but thanks for jumping on with us for a little bit here on this Thursday. And we will talk to you again next week, sir. Have a fantastic holiday weekend.
Thank you, Jesse. My pleasure.
Bryan Doherty with Total Farm Marketing joining us today on Market Talk. It's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.